We're at these 5Ks. I'm going to be watching price closely here. Sellers are trying to get really aggressive. I'm going to take this long. I'm currently long right now at 5,003. Stop loss is going at 49.97. Going to be looking for price to push off of these 5,000s. Looking for a quick move. Looking for a quick move back up, seeing if we can see buyers continue to defend this area. The only thing is, with this high volume node area, like we've pushed all the way down to like the 4,098s. So I'm currently right now floating 1R in profit here. I'll put this here for you guys so you guys can see my trade in P&L live. I like how sellers got really aggressive, but then price was like almost stuck here at these 5,000s, and we've pushed off of these 5,000s here, which is really solid. I'm going to be moving my stops to break even on this trade. In a day like today, there's no point of having that much open risk. We're already up 1R. We should see just a straight push. If not, if I get stopped at break even, we're probably going to see a steeper move down where we'll look for a different type of setup. We're getting a huge push off of these 5,000 so far. Really solid push off.
Order filled.
Let me go here. Currently floating $20,000 in profit. Just took some longs off of these 5,000s after seeing some seller absorption here. Right at the 5,000s inside of this high volume node. So waiting to see if we could push up. I've already hit my target here, so I'm actually just going to secure the position here. So as you guys saw, that was the full live trade, and I want to give you guys a breakdown of the trade itself and why I actually took it. So one of the big things that we have to identify as traders is really high probability setups and areas where we could see our trade setup most likely give us a better edge in playing out in our favor than not. A lot of traders, after the initial bounce off of an area of support resistance, will try and trace the trade all the way up, killing the R multiple, because the average trader is going to be entering after maybe an engulfing candlestick like this, requiring their stops to go all the way down here, and then the targets will have to be a lot larger for that actual trade to play out. So for me, what I like to be accurate with is my entries to really have the smallest stops possible, giving me the flexibility and the opportunity to execute my position and really get myself out of a trade whenever I really like, whether it's either a take profit or solid R multiple has been met. So the number one thing that we have to do as a trader, of course, is identify areas of high probability. Using a volume profile, we can really see where the institutions are accumulating their positions. And throughout today's entire trading day, the main area of importance here from the pre-market, this is going to be a session volume profile. It is not going to be a cash session volume profile. It's going to be the whole session's volume profile. You guys could see when we had, obviously in the pre-market over here, we actually had a lot of accumulation inside of this range from the pre-market, and then once the market actually did open up, we had a big push to the upside, breaking through this area, but again, we still kind of halted here. So this range we actually see is a high volume node where there's a lot of volume and a lot of action happening inside of this range. So within this range, we have the 5,000 round psychological level where I look to actually take the trade from. If we look at this area, we see what? We see price pull back down into around the 5,000s. We see big buyers step in and push price higher. Price pulled all the way back to the high volume node. Buyers again push price higher. Price pulled back in the high volume node, and you guys get the point by now. So when price pulled back into this area, again, the thesis was exactly the same. We're now trading inside of the high volume node. Let's see if we can have passive buyers hold and support price up, and then aggressive buyers consistently lift the ask. which really just means that they're continuing to buy up these higher prices, and we're finding acceptance. And if we could reclaim above the 50-25s, then we could probably push higher from that point. Now, with the hecticness in today, I want you guys to pay attention to some of these candlesticks, right? Look at this bearish candle. Huge wick to the upside and then a big move right back down, which if we were to actually measure this wick is a 220 tick wick, which is absolutely insane. So, I mean, you guys have to take this into consideration when it comes to market conditions and being able to adapt. This was a 281 tick wick. So, you know, with a day like today, I don't want to be married to any trades. I just want to focus on clean arm multiples and get out of a base hit. So, although I could have potentially held for more, yes, you know, even like look at this specific wick here, like holding through this pullback and then expecting price to continue to go up, it takes a big toll on your psychology and your mental capacity. So for me, when price action originally pushed back down into this area, again, what I was looking for really was to establish that buyers are continuing to defend the 5,000s and supporting price above these 5,000s. So as price pushed into the 5,000s, as you guys saw in the video, sellers started to get really aggressive inside of this area. And we immediately saw price back up. Price popped right back up, showing us that there was no reward for this selling at the 5,000s, and really we just had a bunch of trapped sellers here at the 5,000s, which made me execute on the position. Now my stops were here at the 97, so realistically I secured more than a 3.5 or multiple, because the 97s really isn't that large of a stop, and I ended up taking profit around here at the 26s. So if we were to go back and actually measure that, my total risk, my entry was at 5,003, which is going to be right about here. Stops was at the 97s, which is going to be roughly a 20, call it the 97s, which is going to be roughly a 24 tick risk. And then I got out at around the 27s, which is going to be a 93 tick gain. So it is a solid R multiple for a move that happened in the matter of seconds. So once these sellers got trapped here and we saw no reward for that selling, I executed myself with the 5,003s. So you guys saw price consolidated for a bit and then ended up pushing all the way to the target. So I just wanted to give you guys a quick little breakdown along with the actual live trade itself that lasted seconds. Again, guys, like you have to be able to adapt to these new market conditions, and this is where a lot of traders actually struggle that don't use order flow, because they're so like set onto trading in one single way and looking for one specific setup that they can't really adapt to these new market conditions because they're not really finding different areas. Like if we were to go back into this volume profile here, right, and we were to look at price action, there's no real break and retest opportunity, which, I mean, if you're trading like a lower time frame, like a 1 minute time frame, then there's going to be a ton of break and retest opportunities. So there's a break and retest here that really had no follow through and didn't end up playing out. So it was really tough to trade on a day like today if you were just solely trading price action, because the price action is very choppy, really is what it came down to be. We're seeing really crazy markets nowadays, which is one of the main reasons why I got into order flow. For those of you guys that are trading order flow as well, you have these different areas where you can actually adapt to. You understand where the market is really generating the majority of its liquidity, and just really taking trades from those high volume nodes and targeting low volume nodes really helps out a lot and clears up direction as well. Along with our POC, I mean, the POC being at the 5,000s at the time was just like the icing on the cake, made it super easy to act as a magnet for price action to continue to push up from there. But other than that, guys, that's going to sum up the video for today. So other than that, I mean, really, when it comes out to these next few weeks, you guys just have to be careful, lower your size, maybe increase the stops a little bit, because regardless of the fact that, I mean, the markets are moving like crazy, there's not that much volume that's required to actually move these markets. If you guys go back and look at like volume by price 2 weeks ago on the footprint chart, you could see like there's hundreds, if not thousands of contracts traded to be able to move the market the way the market's moving right now. And comparing that to this market condition, I mean, you know, we're not really seeing that. We're seeing 4 contracts, 18 contracts, 27 contracts, 23 contracts on volume by price, and the deltas are really small, but we're having these huge moves out of the markets, which shows us the amount of fear that we see inside of the markets and the amount of sensitivity that there is inside of the markets as well. So other than that, guys, I'll talk to you guys in the next video.